And we are live. Hey, how you doing? Travis Witherspoon here, Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. If you are here for the first time, thank you for taking a look at the video. If you have not joined in, thank you for looking at the video and thank you for watching it even afterwards. What we do here is we actually end up taking a look at the markets and being able to get an idea, especially with the U.S. pairs. This is our fourth episode. If you're joining onto the stream, or if you have not joined it onto the stream and you want to be able to take a look at it afterwards, the video will actually end up being posted up so you can be able to take a look at it. So this is the plan. This is what we're going to end up doing. We're actually going to end up taking a look at what's going on with the market and gauging an idea about what should we do at the beginning of the week. And then after that, moving on to actually how we're going to end up making that plan and making a decision on what we're going to end up doing. Give me 1 second. I'm trying to make sure that people on Facebook Live can be able to see it. It's showing my webcam, but it's actually not showing up on the screen. So just give me 1 second. Just bear with me. Let's see. I want to delete that one. I want to add this on. Let's go. Video capture device, webcam. Okay. And it's showing like I'm not even in the chair. Okay, that's great. Let's see, select. Let's try this one more time. Okay. Remove. Video capture device. Okay. Logitech. Configure video. Save. Okay. And move from there. Okay. So let's see. Okay, so basically, here's the plan. Like I said, what we're going to end up doing, I'm actually going to end up showing you the actual links from my page and being able to get an idea about that. I'm actually getting ready to post it out right now. If you're looking at my screen, what you should be able to see is the Facebook Live. What you should see is the economic calendar. Based off of the economic calendar, we're going to end up getting a gauge off of how we're going to end up showing that. And then after that, we'll end up moving on from there. We're going to end up looking at 6 different pairs. These 6 different pairs are going to end up being U.S. based. I actively end up making a decision on what we're going to end up doing with these pairs. And after that, we'll end up going from there. So let's talk about the economic calendar. The first thing that we're going to end up seeing is that on Monday, it's not going to be that much that's going to be affected by the U.S. dollar. Now, there will be some market manufacturing PMIs that's from the Eurozone, and the Eurozone actually ended up having a pretty substantial week last week on being able to move. So that'll be something that we need to take a look at. The Australian pairs are actually going to end up having their interest rate decision on Tuesday, which will end up making the market very volatile. Now, it's expected to be 1%. The consensus is 1%. So if it's a little bit lower, then that means that it probably might end up making the market jump up a little bit if it ends up being a little bit down. And then that means that it's probably going to end up making a little bit more bullish. But over the course of last year, it pretty much doesn't stay the same. It actually ended up going down again. It was at 1.5, then actually ended up going down 1%. So the Australian dollar has been pretty weak over the course of the last 6 months. So something to be able to take a look at, something to keep your eyes on. From there, U.S. market has ISM manufacturing PMI. Really haven't moved the market all that much over the course of the last few months. Wednesday, we have the Bank of Canada monetary policy report coming out. Something to be able to take a look at. See how you're going to end up playing off of that. You're going to end up having that interest rate decision. Right now it's at 1.75. I don't expect any movement on the US CAD until that time. Typically what happens is 2 days before it actually ends up making a big push, and then after that consolidates. So this being able to keep your eyes on that and seeing how well it's going to end up moving will end up probably being the best way. I'm waiting about 15 minutes afterwards to be able to make a decision. On Thursday, not that much, and then on Friday, once again, first of the month, so you're going to end up getting non-farm payrolls, which is going to end up being a big mover. The GDP from the Eurozone is going to be a big mover, and obviously, when you have that, you have unemployment rate with the Canadian dollar, so that's going to end up being a big one. So not that much from the pounds. The pounds actually end up having their stuff last week. Not that much from the Swiss franc. End up having that information and stuff last week as well. And not that much from the New Zealand dollar. So I expect that if there's any type of movement from a major pair, especially like the US dollar, if there's any type of movement, there may be a large movement from the pairs that are not affected by economic news, because there's really not that much of a pushback, especially if it goes this way. If it's going the opposite of this way, then it's going to be a little bit different. All right, so we got with that in hand, let's go ahead and take a look at the charts. The first one that we're going to work on is the US CAD. Let's see, I want to make sure this is right before we move on. Okay. Now, so with the US Canadian dollar, the biggest thing that we need to take a look at is how's the market been acting over the course of the last 2 weeks. And quite frankly, it really has not moved all that much. It's been pretty stagnant. And the biggest thing that we're going to focus in on is kind of what's going to happen with the daily, because it's hanging around a monthly pivot. So remember, last week we ended up saying that the market ended up, we ended up saying on a monthly chart, it actually ended up having a bearish engulfing candlestick 2 months ago. So early in June, they actually ended up having this. And what's been happening over the course of the last 3 months, it has been testing that actual movement. So last week, it actually ended up going above the 1.33 area. And we were looking at that as a huge point of resistance or support, because it has been a pivot and it has proven to be both of them. And right now it's right above. So I do expect that the market is going to end up being bearish, but I do expect that right now it's just testing to see where it's at. And if the market stays above that 1.33 area, especially with good news with the US dollar, it's probably going to end up staying high. So that's one thing to keep your eyes on. From there, if we go to the daily chart, on the daily, you'll get a better idea of being able to see what ended up happening. So what we were saying was we were kind of looking at what was going to end up happening with this movement last week. We ended up getting almost an evening star, but actually the bulls ended up pushing it up. So this was not an evening star right here. And from there, the market basically consolidated in this area, pushed up and pushed down. It really didn't stay around there. If we're looking at where it was on Friday, it actually ended up hovering above 1.33. And right now we're in no man's land. If I'm looking at this from a Sunday to Monday perspective, I'm not looking at it as a position to be able to get in. I am looking at it as a position to keep in mind. Right now it's close to, it has hit the 786. It's close to the 86. So that will be a deep retracement. I don't believe that it's going to end up moving a little bit more than that, especially without no economic news. So we should see something on Tuesday, and on Wednesday, I do expect on Tuesday there will be some movement based off of the interest rate from the Canadian dollar. On Wednesday, I definitely think it's going to be some movement. So it's something to keep your eye on at the middle of the week. On Monday, remember, it's a holiday for the United States dollar, so I don't expect that much movement from there. So I think it's going to consolidate over the course of the next 2 days to kind of get an idea of. So for right now, I'm actually staying away from the US CAD. I'm just going to keep my eyes on it and see what's going on with this, and then we end up going from there. So for the people that actually end up joining, thank you for joining in. Please send me a message. Please make sure that you're seeing my actual chart instead of actually seeing me. If it is, then please just send me a message saying that it's working. I'm actually sending you my email address, especially if you're looking at going into any type of private sessions or being able to understand a little bit more about our 30, 60, 90-day plan on being able to help New Forest traders be able to get started. So US CAD, I'm actually going to stay away from this one. This is not one that I'm interested in on being able to trade, at least at this point. I do believe there will be something on Wednesday to be able to get into, but for right now, I'm actually staying away. So let's go to the next pair. The next pair that we're going to end up focusing in on is the US yen. So make sure that I'm on the right chart that we ended up looking at last week. Okay, so on the US yen, the biggest thing that we were kind of focused in on was how was it going to end up reacting around that 105.50 area, and if there was a trade to have. We ended up seeing that it was actually in the sell zone. Once it ended up hitting the sell zone, we was trying to be able to make a trade based off of that. So let's go through the monthly just to be able to get an idea, and then we'll move on. So on the monthly, it actually ended up reacting and hitting that 105 area. We end up saying that we wanted to keep our eye on it. We expected that the market was going to end up pushing down just a little bit more and giving us an opportunity to be able to sail down to at least the 104.80 area. That did not happen, at least on this chart on the daily. When we end up looking at it, we end up seeing that the market ended up creating a triangle, and we expected because the previous push was bearish, we was actually going to be able to get in. And that's exactly what ended up happening for the people that actually end up getting into this trade to be able to take a position. I'm very happy for you, especially if you end up getting in. This is actually one that I end up trading on a different type of trading plan. But from the plan that we end up placing out on trade. Let's see. Are we back on? Okay. Sorry about that. I actually ended up having something ended up going wrong with my internet. So ended up being back on. If you're back on, the biggest thing that I want you to take a look at, once again, we'll take a look at the US yen trade, being able to get an idea about what ended up happening with that. I'm going to wait a couple seconds for the people that just joined in. I'm going to end up, just please send me a message making sure that you can be able to see my trading view screen. If you're not able to see my trading view screen, then I need to figure out I need to figure out what's going on with that. But I know the people on YouTube are able to see it. I'm just waiting on somebody from Facebook to be able to say that it's actually good. Okay, so this continuing. Once again, if you're not able to catch this video while I'm actually going through it, I'm actually going to end up saving this video and then posting it out so you can be able to see it. But going based off of the US yen, what we end up saying, well, if we were looking at this, descending triangle, and it was basically a continuation pattern of what has been going on over the course of the last few days. It actually ended up being bearish. From there, it actually ended up bouncing up. It ended up having decline in volume. And then after that, we ended up looking for how it can end up reacting. We've seen that it was bearish, and we're looking for some type of play right around 105.50 to be able to sail down to 104.80. And we end up placing our stop right above the 105.70 area to be able to get in. Based off of that, we end up saying I take profit value was basically at 104.80, and then from there our stop was going to be at 105.74. So if you actually end up getting into this trade, what we end up doing, we actually end up capitalizing on It was right around 70 pips. It wasn't a great game. But 70 pips is 70 pips, and we end up moving on from there. For the people that do not know what 70 pips are, basically what that means is it's a price interest point. It's the lowest denominator of the actual currency. So in our case, our lowest currency is a penny. So there's 100 pennies in a dollar. It moves up 1 penny, then it moves up 1 pip. Depending on the amount of margin and leverage that you end up having on your account, can amplify your gains or amplify your losses on that. So to give you an example, if you have a micro lot, if you end up moving 10 pips, then basically you end up making $1. If you end up doing it if you end up going with one mini lot, which is $1 a pip, then you made $10 off of it. If you end up going with a standard lot, which is $10 a pip, based off of 10 pips, then you end up making basically $100. So based off of this 70 pip movement, if you end up hitting that target and actually getting in at that point, you would have made $7, $70, or $700 compared to the amount of money that you had in your account. So now, with that being said, let's take a look at what's going to end up being next. Because right now, as soon as it ended up hitting that take profit value of 104.80, which was the extension, it automatically bounced back up. So we need to look for basically the biggest thing that we need to look for is a Fibonacci level to be able to get in, and then after that, make a decision on what we're doing. Now, typically what happens is once it ends up hitting this D extension, it typically bounces back up to the 382. Now, the 382 is at 105.250. 108.25, which means that if we're looking at where the market is right now, which I'm going to go ahead and delete this because it's already done fulfilled, we're looking at almost, we're looking at almost 335 pips of actual movement. And the market has bounced back up, in which that's what we expected, but it has not retested this 105.50 area, which is actually a pivot. If you notice, if we go back and just take a look at this area right here, right in this section, we've seen that it hovered around that area. So I do expect for the next few days that it's probably going to end up retesting and going back below, or retesting this 105.50 area, and then after that making a push back up. So initially at the beginning of the week, it's not something that I'm looking at being able to get in. At the beginning of the week, I do think there's going to be movement at the middle of the week. Now, there may be an early push down on Sunday and Monday because the holidays in the United States, and with no holiday being being based off of the Japanese yen, I do expect there's going to end up being a push downward. So with that being said, there may be a push bearish wise, and then after that, they'll give us an opportunity to be able to buy back up to 105 or 108.250. Now, when we're looking at retracements, the biggest thing that we have to keep an eye on is this. Remember, the market does what it wants when it wants to, but typically what happens is it retraces at least up to the 382 area, and then after that, it makes its move back down. So if it doesn't give us a retracement, or it doesn't give us a plan of being able to push back up, then there's no reason for us to be able to take it. There's better trades out there that we can be able to get into. We end up getting into the push zone on the sale. That was a great trade for us on that idea. But now let's make sure that we manage our winnings by being able to find the most optimal position to be able to get in. And I think the most optimal time to be able to get into this is when it retraces down. It gives us a chance to be able to get back in here, retest this 105.50 area, and then after that, buy back up. So the idea will be we're waiting for the market to retrace. Then seeing how it will react to the 105.50 area. Then we will look to buy to the 382 retracement at 108.25. Okay. Now, if that does not happen, then we don't take the trade. If it does happen, then there we go. We have a trade that we can be able to get into. But for right now, I'm not going to a smaller time frame because there's really no use to. So, going to the next pair. The next pair we're going to end up taking a look at is the Euro US. Now, the Euro United States dollar has been it was stagnant until until Friday, where it actually ended up breaking down and cracking that one area. Remember, the one thing that we ended up doing a couple weeks ago, where we ended up making most of our pips, was that we ended up saying that we wanted to be able to sell down to the 102.70 area. Now, I said that if you were not able to get into that trade based off a high price, then you kind of missed the boat on the sale. Now, from there, what actually ended up happening was this. Remember, the market ended up breaking past. We ended up saying that our area that we wanted to be able to get into, well, we think our area is going to end up finishing off at, is 109.20. All right, so we end up going to the daily and to be able to get an idea on this trade. And we end up saying if we could be able to get a high price, and we end up getting a counter trend line break right here at the 1.20 area, which was a resistance area, then that would have been a great opportunity to be able to sell. 2 weeks ago, we ended up taking this trade. We ended up selling it down to the point to where it ended up going basically below 1.1125. Once we ended up taking that sale, that was a great plan for us to be able to get out because it actually ended up bouncing off based off of economic news that was in favor for the Eurozone. From there, we ended up saying we were looking for the market to be able to push up and give us a chance to be able to go up to this 1.2 area. But if there was any type of counter trend line break that ended up happening around this area, then that was a chance for us to be able to sell back down to our actual take profit zone, which was the monthly D at 109.20. So what ended up happening was the market actually ended up making an evening star from this position. Based off of this look right here, broke a counter trend line break. This was your evening star right here, which is basically a bearish reversal pattern. Once it ended up hitting that zone, the entry should have been right here at 1.11135, and then after that, selling it down. If you were in that position, then great. That was actually one of the plans that we were planning on getting into based off of what happened 2 weeks ago. If you stayed in this trade all the way through to where we're at right now, remember, we ended up saying that we're selling it down to 108.50, 109.20. The sale right now, you would be up 263 pips. So once again, good for you, good job. Remember, our target right now 109.10. It probably should be 109.20 because we want to get out of it earlier. From there, if you're not in, basically what happened is you actually end up missing the boat, which is fine. Sometimes you don't catch every trade, but this was a great trade plan for everyone to end up taking a look at this on Plan Your Trade TV 2, which was on the 18th of this month. And all you have to do is just stay into it by the end of the month, and then you would end up basically capturing everything from there. So great trade plan, great plan. I know for me, I actually ended up not getting into that second portion of the trade. I did that on a different type of trading plan. But for everyone else, they end up doing, kudos to you. We actually end up doing a very good job on that one. So just waiting for it to actually end up hitting this last little point. If we're looking at it right now to 109.20, the price is at 109.90. There's 70 more pips to go. It may be an area to look to scalp in, but right now, quite frankly, I would actually stay away from it just because it's so low. And there's really not that much pips left in it right now at this point. So US Swiss franc, let's go to the next one. US Swiss franc was one of the trade pairs that we ended up saying that we thought we can be able to stay in on Sunday, or at least try to find a position in on Sunday. And then after that, play from there. The market ended up dropping down almost 200 pips on last Friday. And then after that, proceeded to bounce right back up after the gap. Now, a couple things to be able to help you out, because this was one of the trades that me and some of my clients in a private trading session I actually ended up taking, and it gave us some warning areas to be able to take it, and it gave us some warning areas to be able to get out. And I want to go ahead and explain that. On the monthly chart, basically what we ended up saying was the market is expected to go down to the 1.618 and 96.50. We was expecting to be able to sell it down at 96.50 to be able to get in, or to be able to ride that out. And from right now, that is almost at this point 250 pips away. So on the daily, what we initially ended up doing on Plan Your Trade TV 2 was we actually ended up taking a sale based off of the counter trend line break. I actually ended up taking a second sale based off of 618 retracement. And once again, we're still expecting for it to be able to go down to the 96.50 area as I take profit zone. What the market actually ended up doing was to actually end up pushing all the way back up and retracing and actually breaking past this actual low. Now, what we end up doing in a private session was that we end up going to a smaller time frame to be able to get a better risk reward for this trade, which was on the 2 hour. We end up seeing that it was actually making a flag pattern right here. Now, typically the flag pattern happens, typically the flag pattern basically goes in the direction of the actual trend or what the previous trend was. If we're looking at this, we can actually look at this in two different ways. One, you had you had 6 hours and basically one full day of bearish movement. Then after that, it ended up popping back up. We had declining volume from that gap. And then after that, it started to consolidate in this area. So what we were looking for a little bit more than anything else was to see that if there was going to end up being some push to the downside, if there was going to be some push to the downside, we wanted to sell it on the retracement. And that's what these arrows were for. So let me erase this and kind of give you a better example of what ended up happening. This actually ended up being a loss for us this week. And I'm going to explain why we actually ended up cutting our losses short, which is actually one of the biggest things that we ended up talking about in the Carter Cal Academy and the Precision Entry Point trading system. But this is what ended up happening. So market ended up going to the downside from this triangle. It actually ended up going down. From there, we always look for the retracement, especially if you're not able to buy, at the top of resistance based off of this move. So from there, it retraced back up and hit the bottom of the triangle again, which turned past resistance into future support. And we end up taking our sale from there, expecting that it was going to end up going down to our actual target at 96.50. From there, the market actually ended up rejecting, then pushing all the way back up, and actually end up breaking it to the upside. Now, typically, that's your first warning. When it happens like that and actually ends up breaking the triangle and it hits resistance, it turns a past support into a future resistance and then breaks that resistance again to be able to go to the upside. The first warning is being able to see that it broke out from the upside. The second warning is this, to be able to make your decision on if you should get out early. Right here, the market ended up rejecting and actually hitting this pivot area, which was at 98.15. If you look at previous times, it has used 98.15 as support and actual resistance. So that was a key number to be able to get an idea about where the market was going to end up hitting from there. So what actually ended up happening was it ended up touching that zone and actually ended up bouncing right back up. So that was a clear indicator that the bulls actually ended up winning that consolidation. And from there, the last zone that we were looking at was if it broke, if it ended up breaking this high, which was the actual move on the daily chart where it ended up moving down almost 200 pips, then that was an indicator that we should not be in a trade anyway. Based off of this move right here in the rejection, I actually ended up getting out in this area right here for a small loss. But once again, being able to understand where the key areas are for when a market ends up making the decision that it's going to end up going against you is the easiest way to be able to cut your losses. Remember, you want to cut your losses short. You want to sit up there and let your profits run. At no point in time do you want to stay in a trade when it done gave you so many indications that it should be able to get out of it. So we end up taking a loss on that one. That's fine. We actually end up making a huge gain on it. On the downside, we end up taking a small loss on the upside. So one thing to keep in mind on when we go from there. Now, going into this week, the daily is still in the sell zone and it's still reacting off of 0.990. Now, if we're looking at the overall move from the AB boundary was at 99.78. As long as the market does not break this 99.80 area, I'm still going to end up considering this to be bearish. Now, that gives us a deeper retracement, and it gives us another number to be able to work off of, to be able to say, hey, it's still somewhat in the sell zone. We end up taking a small loss on it earlier, but it still has not broke that 99.80 area. So if it gives us a counter trend line and it's proven that the market is going to end up being bearish, let me get rid of this triangle now because that doesn't help us out anymore. And this arrow. Based off of this counter trend line right here. That's our outer trend line, and this will be our inner trend line right here. If it breaks that trend line right there to the downside, which means that it breaks the 99 area and it basically retests that 99 area, then that may give us an opportunity to be able to sell and this place our stop above the A, which will end up being basically at 98.80. So that means that right now we'll be risking right around 94 pips, let's say 100, to go after, because the profit target has changed now. We end up going down to 95. We're looking at 95.90 as the new target. So target will end up being 95.90 if we're looking to sell. If we get a sell position, stop will be above 99.78, and let's say stop will be at 99.80. Okay, which means it will be a 100 pip stop. And if we take the trade, once it ends up hitting the zone. So matter of fact, I'm sorry. Right now the target will end up being at 95.40, which means that right now the market is actually end up hitting a 786. It has not hit the 86 yet on the retracement level. So actually the target is a little bit deeper than where I said. I'm sorry, I do apologize. But we're looking at where it is right now. We're talking about 360 pips compared to right now 100 pips stop. That's a 3-to-1 type trade. I'm very happy with a 3-to-1 type trade if we can be able to get it. We probably might end up getting some type of movement just early, but I do think it's going to end up being stagnant. Once again, there's no economic news that's going to end up pushing and making the Swiss franc strong at this point. So this, I would say that keep your mind on that, and know that if you do take a trade, this will end up being a trade that's going to end up taking a little bit more than possibly a week to 2 weeks to be able to finish, just based off of that. We're looking at the daily chart. The daily is in the sell zone, and I do expect there's going to end up being some type of selling that's going to end up happening, but we just need to keep our eyes on that. Once again, 786 on this one is at, let's see if I can move this out the way. It's at 99.10, and when you hit 99.10, the take profit is at 95.40, which matches up with the 2-hour position at 95.40. So target on this one will be 95.40. And typically I like to go with a whole number. So let's say 95.50, which means it's a 100 pip stop, and we got a 350 pip target. So that gives us the opportunity to be able to go after that. So that's one of the trades that I would say I would look at. My primary focus will end up being on the 2-hour and seeing if it breaks this trend line right here. If it breaks that trend line and it gives some type of substantial movement based off of that trend line, I will go ahead and enter that trade, and I will feel comfortable with being able to make that trade more than anything else. So I'm going to add alert on the trend line. We're saying crossing the trend line. We want it once the bar closes, and we want to say sell to 95.50 with stop at 98.80 or 99.80. And there we go. So got our first trade that we're looking at. First position that we're looking at, and we'll end up seeing how that's going to react. Let me put a timestamp on this one. This is 9/1. 19. So we got an idea about when that's going to happen. So that was the U.S. Swiss franc. We have 2 more to go. And I want to end before the actual market opens. I don't want to have y'all hear all my noises from my alerts and everything else like that. So let's go Australian dollar, United States dollar. On this chart, we end up saying a couple things here. On 825, we're looking for a high price to be able to sell. If it breaks the counter trend line break, and we was actually selling it to 65.60. If you end up getting into this trade, you will be very happy that it's almost at the target, and we're about 20 pips away, which I'm very happy about. Gave us a heck of an entry price. I think it ended up giving us to us on Wednesday, I believe. But let's go ahead and talk about it now. So we end up saying that we wanted to be able to find it. We wanted to be able to get a high price in the sell zone. Once we end up getting a high price in the sell zone, we're just going to end up selling it down from that point. Market ended up retracing back up, and it actually ended up giving us a high price right here based off of that economic news that was somewhat bad. From there, I end up saying if we end up getting any type of movement towards the downside, then we'll have an opportunity to be able to get in. Well, the market ended up basically dropping all the way down based off of Australian dollar news, and based off of that, we end up getting a high price. If you end up getting into it on the 18th, then you was actually still in that sale, and you end up going down. Remember, I ended up saying if you could be able to find a high 2-hour price, then stay in the trade and go from there. So our high 2-hour price was right here in this area. We end up taking this sale right here when it ended up breaking. Now, we wanted to see if we could be able to get it higher at 68.17. That did not happen, but we still got the counter trend line break, and that was the one thing that we was looking for. From that sale, we end up saying, hey, our position was going to end up being all the way down at 60. We end up saying that our target was going to be at 65.60. The market ended up retracing down, and then after that, ended up retracing back up. If you end up taking profit just at the below at 66.80, then right now you would end up capitalizing on. You would have capitalized on basically 100 pips. If you let it ride back up and kind of go back up, right now you should only be up maybe 17 pips at this point in time. If you're not in, this is what I'll be looking for. We're looking for a high price in the 2-hour zone. Right now, the daily is getting close to the buy area. And once again, I do think that the market is going to end up being stagnant over the course of the next couple of days. So I would say possibly just keep your eyes on it. It wouldn't be one of the ones that I would look at trying to pull the trigger on early, especially with there's only being so many pips left on being able to get to the target. Right now we're right around 100 and we're right around 140 pips. So the biggest thing that I would look for is see if we can get some type of push back up. Just a slight retracement back up, get a high price and be able to sell it. Maybe it might hit the 68.17 area. I completely doubt that it will, but I think that with the Australian news, that may end up being a push back up. It may be a retest of the 68.17 area on Tuesday, because that's when the news comes out right there. Maybe it might end up doing that. Once it ends up giving us a high price in that area, then we'll look to sell back down, which will end up giving us a great risk reward value because we could place our stop right above the A again, right around 68.80. And then after that, selling it down to 65.80, selling it down to 65.60. Now, if the market keeps on going downward, then stay out of the trade, only because it's not giving us a great risk reward value. But if it does push up because of the holiday and does give us a actual position because of the interest rate decision, which will be a high price, and it rejects off of this 68.20 area, kind of like what they end up doing right here, and this over in this area, then that will end up being a great trade because I think it will end up losing steam because the Australian dollar has been so weak. So I'm going to write this out. Let's go ahead and talk about it again to give a better idea. So I'm going to say looking for a high price. I'm looking for a high price and expecting expecting a upward push at the beginning of the week. Based off of, I'm going to write EN for economic news. I would look to sell if the price remains below 68.20. I would look to sell. The price remains below 68.20. Let's go ahead and put a timestamp right there. This will be for 9/1/19. Now, if it does that, once again, our stop will end up being above this pivot high. Let's say 68.80. If it does not, then quite frankly, we'll just stay away from it. But the biggest thing that I want to be able to focus in on is that remember, we ended up taking this trade 2 weeks ago. It ended up giving us a great. It gave us a great opportunity to be able to sell this at 70.20, and we ended up taking that sale right there. The market has actually ended up pushing down to that area. And if you were in this trade a little bit earlier on, or even if you got into the trade right here when we end up talking about it on the sale, then the biggest thing is just protecting your profits. If it once it moves below the zero area of 68.80, then the biggest thing from there would be, hey, let's go ahead and move our stop loss into a position to where we kind of make it break even. Now, if economic news comes out, or if the price remains in consolidation and with this being the biggest week for its economic news, if you don't feel comfortable with it, don't stay in the trade. All right, that's very important. Don't stay in a trade if you don't feel comfortable with it, and just go ahead and bank in the profits from there. All right, but last pair we're going to end up talking about the pound United States. The pounds end up having some movement at the end of the week. From what I remember, we end up talking about a position that we could be able to get in. We actually got stopped out on this one on the 23rd, and just wanted to see how it reacted. Remember, monthly has been pushing down. It has not fulfilled that mark at 1.1830 as of yet, but it has pushed below the 1.22 area, which means that we still have right around 300 pips of actual downside movement. I do expect that the market can end up staying toward the downside. So on the monthly, we'll be looking at trying to figure out trying to get any type of seller's movement. I did not trade this pair over the week. But I did say we wanted to see how the market was going to react at the 1.22 area and see how it can end up pushing down. Now, this is giving us a great chance to be able to sell it, even though that the market has already gave your entry on the 19th. I'm sorry, on the 29th. You would have got into it. The 29th was when? 29th was, no, I'm sorry. Let's try it over again. This is August 29th. What day was this? That was 3 days ago. Yeah, I'm sorry, August 29th. August 29th was Thursday. You would have got into it on Thursday, or you even got into it on the 30th, then you would have had basically that high number that we was looking for. But even with that being said, if you didn't get into it and you're looking for a position to be able to get in, the biggest thing that I focus in is on the 2 hour now. Now, the one thing that we want to do, because it has rejected and retested that 1.22 area, is probably not going to end up hitting that 1.22 area again. So what I end up saying on 825 is probably not going to work for the people that are looking at it now. We're just looking for a high price in the 2 hour zone, and it may end up giving us a high price early on Sunday based off of the movement, or it may end up pushing back down. Now, if you're staying up around the London area, London time session, you will be able to see that it may end up giving us a chance to be able to get in early. If not, then it's something just to be able to keep your eyes on. But if we go to the 2 hour, the 2 hour has broken like we said that we wanted. This is a beautiful, beautiful type move. It went down right there, rejected, and went all the way up to the 1.22 area. Had this long wick above. For people to actually end up getting it right there, that was a great sale. But we wanted to see how it reacted and went back below the 1.22 area. Now, from there, the market has went down. The stochastic is basically creeping up into being oversold. I would like to be able to find a high price on the oversold position. So the one thing that I would like to be able to do is this. I want to see how it can end up reacting based off of market. I will not make a decision until the open happens a little bit later on Monday morning. Well, there goes my announcements. Okay, so we want to see how the market is going to end up reacting off of this point. If it breaks automatically below, then I would look at being able to go ahead and trade it. We want to see how it's going to react before it's crossing down. And we want to be able to sell it during the bar close. We'll sell to daily D as our position. But I would like to see if it can retest back up to that 1.22 area, which is 40 pips away. If it doesn't, then you have to make a decision. If you end up making the decision that you're going to end up selling it, then you're going to go ahead and sell it, and you know that your stop is going to end up being above that position. Let's see, where did I say our stop was going to end up being? We said that our stop was going to be at, go back to the daily. Actually, we didn't make a stop. So let's do this. Let's put our fibs out real quick and let's get a position. So here was the last swing movement right here. Here goes your swing high. There goes your swing low. Right now, market hit at 5-0 position, which means that it may end up pushing up to a 618, but we end up saying that the position was basically at 1.83, which was a monthly movement. So it does not matter if the daily D is below. The monthly basically controls the daily. So we can either place our stop over at 1.550, which will end up making our risk reward almost awful. 390 for 318. So we won't be able to do it off of 2 hour. We have to be able to look at it from a daily. We won't be able to do it off a daily position. We have to look at it from a 2 hour position. So let's erase that. Let's try it over again. Our new swing high was basically right here. Yeah, our swing high was right there. Our swing low was right at this point. We know that the 1.22 pivot has been a point of reference of where we can actually be able to sell it and feel comfortable with it. So instead of actually placing it above the A, okay, I don't want to get rid of that one. Instead of placing it above that 1.25 position where we'll have a bad stop, what I'm going to end up doing is doing this. Yes, I want to remove that one. Let's place a stop above this high, which was at 1.30 basically, and we're going to place our stop at 1.2320. Now, 1.2320, from this point, we end up making our stop. If we were to get the crossover, we're talking about 161 pips going out to 324. Okay, now that's a 2-to-1, which means that for every time that you end up taking this trade, you have to be able to win. You have to be able to win 5 to be able to actually make a profit. Which is, I mean, actually you got a 4 most of the time, but 5 to be able to make a profit out of 10 times. So I would actually be okay with that. If you want to be a little bit more aggressive, and instead of making it above the A right there, you possibly could be able to make the stop above this high right here, only because it's giving us a high from right there. But I would feel, matter of fact, I'm not even going to say that. I would feel way more comfortable being able to place the stop at 1.230. Now we take this sale. If we end up taking this sale and we end up selling it down, we got a 1 to 2 risk reward. I'm going to end up showing you the short position so you can be able to see it. Let's say if it breaks below this point right here. Okay, that's the wrong one. That's buying. Let's do shorts. All right, so let's say if it shorts and it breaks right here. So basically a 1 to 2 based off of this movement. Basically, right out on 1 or 2 if we end up getting that moment a point. So I would really be looking for a high price. If we can be able to get a higher price, then that would be great. And actually end up lowering the risk reward down. It end up making it a true 1 or 2 for us being able to get in. If it does do that, then that'll be the position to be able to go to. But I will only look at that on if we can be able to get a high price. If it breaks below, then that means that your I would say take it and only put in 0.5% on your trade, and then after that, look for a higher price and possibly be able to take in a second entry. But that will do that just to split your risk on being able to get in. If it does not, then that means that now you have to look at it end up being a little bit lower, but the market may end up pushing against you. So remember, there's really no news for the pounds going up this week. There's news about the euros that may end up affecting the pounds. Brexit news is still going on with Boris Johnson and seeing how he's going to end up reacting. That's why we end up getting that bearish push at the end of the week last week. So it may end up being something else. But that's pretty much it. So just to review, we got the pound US as a potential position. We end up looking at the pound yen as a position that has almost hit, and we're probably going to stay out of that. The US CAD, we said we weren't going to get into by the end of the week. We end up staying with the Euro, United States dollar. If it gives us a high price, then we may end up getting into it. But for right now, we're going to end up staying out of it, especially with the upcoming news that's coming up. The US Swiss franc, we said that if it gives us a 1, 2, 3, if it gives us a sell position, then we might be able to get into it because it's at a high price from there. And it's pushing up towards the 786, which will make it a 1 to 3 risk reward level. If we're looking at the United States dollar, remember we end up saying that we were looking for a position by the middle of the week and possibly being able to get in. And the pound US may end up getting into it probably maybe tonight or hopefully in the morning. But I think the only reason why we get in right there is because, remember, with the holiday being tomorrow, there's not going to be that many people actually making trades. So I do think it will be in consolidation. I think that you will end up getting the price. I think that you end up getting the price that you want, being at a high price. But I think that the market will go away from you a little bit unless you're just able to keep your eyes on it the whole time. But if I provided value for you in this video, in this live video, please make sure that you end up liking, sharing, and subscribing. I end up doing this every week. If it's helping out people, please make sure that you send me an email basically saying that it helped you out. And hopefully you end up profiting with me and everybody else that's in the Carter Cow classes. I'm very happy to be able to say that the Precision Entry Point course is actually up. I'm going to end up placing it on my website. The website will end up being up by the end of the week. It's actually running right now. I actually have it up there, but there's certain tweaks that I want to make to it to make sure that I can be able to have it working. But I'm very happy about being able to display that to each and every person. I do host private sessions. The private sessions will end up being on Monday, Wednesday, and Friday for a free webinar if you're interested in being able to learn about the Forex market. If you are, please make sure that you end up sending me an email or please make sure that you end up sending me a message in one of these posts. And I definitely end up taking the time to be able to reach out to you and talking to you from there to kind of get a gauge about where you're at, if you're new or if you have been trading, to be able to find a system that'll be able to work for you. But like always, make sure that you plan your trade and trade your plan. Everyone, y'all have a great week. I'll see you here bright and early on Sunday again at 4 p.m.